So in many inflationary environments, and especially in financial repression environments, generally real assets, harder assets are the place to be. And so you'll historically you'll generally get weaker performance in paper assets, as well as say highly valued growth assets. And you'll generally get better performance out of value type of assets, yield generating assets, and hard assets, especially if they're kind of long-term leveraged, right? So if there's houses with 30-year mortgages attached, or there's high quality companies with pricing power that have 20-year old bonds that they borrowed, those different types of arbitrage, those are generally the types to be. And so if you look at the 40s, for example, gold was pegged and illegal. So that wasn't really a good data set for American investors, but commodities did well. Real estate did very well. Equities were kind of mixed because, you had World War II going on, so a lot of uncertainty. But overall, that was a good time for investors to get in. It just, it took some time for that to be realized. Whereas something like real estate was more sudden in such an inflationary and financially repressed type of environment. And my expectation generally is to see a similar theme here in the 2020s, which is, I think a lot of companies are reasonably valued compared to what you can get out of, savings and bonds if you're willing to look through what can be pretty extreme volatility, and if you diversify. So I generally like the more value or dividend type of companies in this environment. To the extent that I would go in growth, I'd be very selective with what I'm looking at. Something that is maybe already got killed. Maybe because we've seen a lot of carnage and growth. I think there's probably some babies thrown out with the bathwater there. But yeah, and generally speaking, you want to be more commodity focused, value focused. And I think the biggest challenge right now is what to do with global investing. That's always a big challenge, just because there's so much kind of geopolitical turmoil around there. I think probably eventually this decade we'll get a turn where you start to see more international equity outperformance. But that is admittedly something I've been early on. That's been something I've kind of been expecting. We got a number of false starts on that. So that's something I'm still kind of monitoring to see to what extent that might unfold.